One of my clients just gave me this as a gift just now. It's so cute. It's actually me in a bobblehead. So at the start of this year, we made a video predicting that for housing market in Canada this year, it's going to trend upward, especially for the bigger units, which was opposite from what CMHC was saying. And right now we're seeing a huge amount of overbidding everywhere. So once again, the topic of affordability and how hot the housing market is the center of discussion. For the last couple of weeks, we've been having a lot of conversation with our clients privately on the future housing trend, and especially after summer, what we might be seeing based on things that we're looking at right now. So I want to make a video to go in depth on this. So if you're curious about the housing market, this is the right video for you. Now, without further ado, let's get started. So before we jump into it, some people want me to talk a little bit about the rental situation. So I'm going to do a very quick update on the rent across Canada. Now, according to rentals.ca's report, rent is trending downward still, but it's a very slow pace. Average rent per unit is lower. It is interesting that the average rental size seems to be the same, around 750-ish for apartment, and the townhome and house are converging to the 1,300 to 1,400 range. Average rent for major province all fell except for rental apartment. Ontario suffers the biggest drop, and if we sort by popular municipalities, Vancouver is the most expensive, but an average 5% decline. Now Toronto, obviously because of the downtown situation, there's a 21% decline in rent. But further places like Hamilton and Kitchener have increased in their rent. GTA continue to get hammered so far, but realtors have been telling me that downtown Toronto seems to be picking up again in the condo space. Vacancy is up slightly, 3.2%. It is expected due to low immigration last year. So overall, there seems to be not much change in terms of rent. However, that's something that we need to pay attention to in the summer, because I suspect this will change once summer comes. And I'll talk more in the later part when I discuss about the housing market outlook. Now, normally I would do update per province and talk about the housing market there, but for currently, this one chart basically sums up everything. Everywhere across Canada is extremely hot and there's tons of bidding war going on. Now, I've included some charts and graphs still in the Facebook group, so if you want to know more about your specific area, you can still head there and take a look. But for this video, I just don't see any value spending 10-minute segment telling you that every single place is very hot, there's lots of bidding war. I think we all know that already. So what I want to do is actually skip forward to look at potential future changes in the housing market. Alright, so let's talk about the housing market outlook. Now, just as a disclaimer, these following are just my personal opinion. These are based on things I read online and interviews I listened to, and also numbers I look at myself. In no way do I consider myself an economist or expert in the housing market. And if you're an expert in this field and I said something wrong or you don't agree with, correct me in the comment below. I would love to learn more from you guys. So I'm going to tell you what are the major factors I'm looking at, what is my prediction, and how I'm going to act in my housing portfolio based on my own predictions. So basically, my focus is going to be around May to July of this year. And number one reason is that's the expected time for US to vaccinate everyone one dose in their country. And for Canada, we should have at least one dose done by July of this year. Now, why is the time frame of being vaccinated is important? Well, that's because of the money supply growth that is going on right now. So for money supply, we're going to be looking at two numbers. One is M1 and the other is M2. Now, for those that are not familiar what they are, M1 basically just measures all immediate liquid cash. So these are things such as cash and checking account, things you can use immediately. Now, M2 measures everything that M1 measures, plus saving accounts, money market, mutual funds, and other time deposits like GIC. So in essence, M1 measures the buying power of everyone in the country, whereas M2 measures the investment sentiment. Now, what we're focusing on here is going to be the growth rate of M1 versus M2. So when M1's growth rate is more than M2, what that means is in the economy, people have more preference to hold on to cash, to spend them to buy things, than to invest them in the market. And vice versa if M2 grows more than M1. So let's first look at US M1 versus M2 growth rate. Now, if you look at this chart, it's a scary and absolutely insane gap between the growth of M1 versus M2. I mean, just look at 2008 when we went through the great financial crisis. During that time, because of money pumping and money printing, M1 is growing faster than M2 as expected. But this is a blip versus what we're going through in the US right now. Trillions of dollars are pumped into the economy and into businesses and people's hands. So while M2 does grow, more people are getting into market, that is true. It does not compare to how much is being held as cash. Now, looking at Canada, we're not as crazy as the US, but we're still seeing a large discrepancy and similar trend going on. So what does this mean now? So to me, this looks like a slingshot now waiting to get released into the economy. And all they're waiting is just one trigger. So to me, that trigger would be vaccination. When vaccination is done, whatever country that opens up first, their slingshot is going to get released and propelled forward. And when that happens, we're going to see explosive economic growth and consumerism that we have never experienced before. Now, there was an interview from Fortune with Alicia Garcia Herrero, who is the chief Asia Pacific economist at Paris-based investment bank Natixis. She said that this explosion of growth could propel US GDP to 7% this year and may even outpace China this year, which has not happened for the last 45 years. The Conference Board of Canada also projects Canada to grow at 5.3% this year, which, is not as high as US, but it's also really high for us in comparison to our usual last 5 years pre-COVID. Okay, so a lot of explosive growth, especially in the US. But you might ask, how does this relate to us? Obviously, US is probably going to open up soon. So if Canada is still a couple months away, how does US open up first affect us? Well, it will affect us because if you zoom out and look at the whole world's commodity trade, supply and demand, it kind of works like a free flow river. So what that means is if there is one part of the river having changes, right? Water is naturally going to readjust and flow to other places to balance out the supply and demand. So this is why I think some of the sanction that countries do to each other does not work very well. For example, if country A say, I am not going to buy oil from you from country B, but your internal consumption of oil doesn't change. So while you stop buying from country B, you might have to go to country C and now buy the oil. But the thing is, country C was supplying oil at a perfect supply and demand balance. So now you increase the demand for country C, well, they might not have enough supply to supply you with the oil you need. So guess what they're going to do? They're going to go buy oil from country B and then resell it back to you. So at the end, you might still be buying oil from country B, but all that changes is just it has rerouted to country C first and then going back to you. So in this situation, I see it to work the same. When there is explosive growth in one place, especially if it's our neighbor and also one of the largest economy in the world, it will spill over and affect us even if we're not fully vaccinated yet and our economy is not open back up yet. Their explosive growth in consumerism will benefit some of our businesses, which will make our business grow. And in turn, our businesses is going to spend more and buy more even if our border is not opened up yet. Besides, we are likely to open very quickly after US anyway, as some people in Congress already is asking Biden to ask for Canada border to open by July 4th. So when US opens up its market and economy, I do believe that for Canada, it's going to enter into a new phase for the economy and housing market. And this is where I will make the prediction for 2021. So first of all, we know that inflation is here. Despite what CPI is saying, one of my subscribers said it best, just go to grocery shopping and you will see inflation everywhere. Now, while everything have definitely gotten more expensive, I do believe that the real inflation spike have not arrived yet until it's summer. And what is inflation? Simply put, it's just a sustained upward price movement for all goods and services. Well, when demand explodes and supply don't keep up, there you go, you have inflation. People are willing to pay more and bid more for the same goods and services because there's just simply not enough to go around currently. Now, we actually saw a mini version of this happening in the car maker industry. So back in 2020, all car makers basically cut their production because they foresee sales to grind to a halt. So they have told chip makers that they no longer need as much microchips because they're not making as much car as previously. Well, what ends up happening is during Christmas of last year, sales exploded and there's not enough supply. So car makers are trying to ramp up production at the end of last year and beginning of this year, but they've already told all the chip makers they don't need as many microchips. So all those chip makers have allocated the resource to, iPhones and other smart devices. So now a lot of car makers are hurting for microchips and they're scrambling to keep up with the demand. So I believe what we're seeing in the car maker example is going to be the representation of the whole market once economy opens back up. Alright, so now if the real inflation spike is coming, then what's next? Now there's a very good interview from BNN with David Rosenberg on these topics that I've linked below, and I recommend everyone to check it out. It's a very good interview. And in there, I agree with what Mr. Rosenberg are saying, except for one thing. He said that Bank of Canada will keep the rate same until 2023 or even 2024. And his main reasoning is that all the money being pumped in the market right now is transitory and temporary. So all the GDP boost we are going to see is also going to be short term. And he argues that Bank of Canada is not going to increase any rates based on these short term trends. And lastly, he said that employment is not recovering as well, so we're in no position to increase rate. So out of all the interview, this is the only one part that I see it differently. I actually think Bank of Canada is going to increase rate a lot sooner than they said. In fact, I suspect the rate increase could happen before the end of this year. So the way I think about this is that in a vacuum, what Mr. Rosenberg said makes perfect sense. But we're not in a vacuum and there are additional factors to consider. And the number one reason is humans' tendency to overreact and overcorrect when things happen. So if we see in the market last month, we already see things like this going on. When things go up, we think it goes up forever and we go all in. When things go down, we think it's the end of the world and we panic sell. And we saw this in tech stocks, especially stocks like Tesla. Once yield have jumped slightly, all tech stocks are oversold, and then next day, they're bounced back right away. So when the consumerism, when the explosive economic growth happens and Slingshot is being released, I do see a lot of business will overreact to this and they're going to massively hire and expand. Now, we already see a little bit of this happening because employment numbers that just got released flew way past the expectations. So currently, while unemployment is relatively high, I do see it to drop rapidly during the summer, and it will be the first signal for Bank of Canada to increase their rate. Now, the second thing to consider is citizen sentiments and political pressure. There has been a lot of pressure from multiple sides to urge the bank or the government to do something about the current housing market situation. Even politicians are calling for emergency meetings on housing affordability. So while Bank of Canada is supposed to make changes and projections based on long-term trends and numbers and facts, I do see these two factors getting to them. So this is why personally I don't rely too much on what Bank of Canada is telling us. I think things are constantly changing, and in the summer it's going to change at an extraordinary fast pace, and I believe that they will be forced to change their stance or review their policy once summer comes and the real inflation and employment shoots way higher than their expectation. Now, with that being said, I don't see them to increase rate massively in one go. However, I do see them to increase maybe 0.25 by end of this year, and then we're going to experience a rapid small increment of rate increase. So what does this mean for the housing outlook? Now, I do agree with Mr. Rosenberg in the interview saying that we are in probably one of the hottest and biggest housing bubble in Canadian history. For last year, I don't think we're in a bubble yet because there is a difference between things being overvalued or things getting more expensive versus going into bubble territory. If things are just expensive, then it's just expensive. But to have a bubble to form, you need affordability to strain to a point where there's no longer any new buyers that can or will afford the higher price to buy that thing off of you. That's when a bubble forms. For that to happen, usually we need interest rate to increase. And so this is why I think last year we haven't seen a bubble because there's nothing to suggest rate increase. Now, I know housing prices is very hot right now, but I believe that it's going to get even hotter during the summer. But if interest rate increases around that time or very soon after, I think that's when we have a very dangerous bubble situation on our hand. Now, according to economist Hyman Minsky, there are 5 stages of bubble. Now, keep in mind, this is supposedly for the stock market, but I think similar stages can be applied in the housing market. So first thing is displacement. So this is when there is a change in the market or from a government, something happened. So for example, interest rate is lower. And the second stage is boom, which is a slow rise in price, but it gains momentum very fast. Third stage is euphoria. This is when caution is thrown to the wind, asset price skyrockets. Fourth stage is profit taking. This is when people that are more sensitive to the market, they're more aware of what's going on, they sell and they take their profit. And then the last stage is panic. This is when most of the people still haven't sold, but it's very hot, and then a small event will trigger a mass sell-off. Now, looking at this stage, it does feel like we're in the euphoria stage right now because of how much overbidding is going on in the market. I've been hearing from realtors telling me that some buyers are overbidding to 350K above asking with no subject removal, no inspections. So that does sound like it's a euphoria stage. But there's one thing to keep in mind is that I've said this before, unlike stock, housing has additional value to it. For example, if it's your principal home, you can live in there. If it's an investment home, you can rent it out and generate income that way. So while I think there will be a correction, I do not think price is going to drop drastic like 40-50%, that kind of crazy number. However, it will correct and people will get affected, especially the people that are overbidding by a lot. That are way outside of their comfortability. Those people really need to be careful about what they're doing and recheck their numbers. Now, a couple more things is that I believe during summer there is going to be a complete shift in the housing market to prefer condos, especially smaller condos. And the main reason is, number one, vaccine is here, like I said. So most investors do see condos returning, rent going back up, and Airbnb restarting. So they might be more keen to start holding condos currently. And number two is that townhouse and house have exploded in price already, whereas condo have not increased as much. So for a lot of people that can't afford townhomes or houses, but they're still experiencing the FOMO, then they might shift their focus onto condo and just try to get into the game. And from what I'm kind of hearing from realtors, it seems to correspond to this trend. Condo seems to be picking back up, and I have friends that have sold their condos recently, like 1 bedroom plus den, exactly they're asking within a week, and they have like, I think it was 8 or 10 offers. So let's wrap up by talking about what I'm doing with my own properties and whether I will be buying more or not. Now, if I was buying for my own principal home, I would say yes, I would still be looking, because it is my own home and there might be a lot more emotional reasoning and needs. You can check out my previous video here, which talks more about the thought process for first-time home buyer who are debating if they should be looking for a home or not. But what I would change here is I will use my current interest rate plus 1% or even 1.5 or even 2% to calculate my current budget and affordability. Now, on the matter of overbidding, I think it's extremely subjective, and I don't think it's right or wrong to overbid. It simply depends on you. If today you really think it's worth whatever price you're trying to bid above asking to get that place, then it is worth that price to you, and I think it's okay as long as you're comfortable with the number and it's something you can afford. Personally, if I see overbidding going on, I would just step away from the market, but that's just me, because for overbidding, one thing I don't like is there's a lack of information. I have no way to know what's my second best offer and how much more am I overbidding. Am I doing 5,000 more than the other person, or am I doing 50,000 more? So I don't like the lack of info, so this is why I don't go into a bidding war with anyone. And this is also why in my previous video I've talked over and over again, you should look into the pre-sale market, because number one, no one's buying those at the moment, so you probably can pick up some very cheap options. And number two is you know exactly what you're gonna pay. So to me, I think that's more transparent and I have more information on my hand to work with. But again, that's just me. Principal home has a lot of emotional reasoning in there. So you can do whatever you like, just make sure your number works out for you. Now, on the other hand, if you're buying as an investor, I am much more confident I can get a better return elsewhere with other options than getting an investment home. And this is also something that Mr. Rosenberg have said in the interview that I agree with a lot, and it's the concept of GARP, which is growth at a reasonable price. Because at the end of the day, no matter what I'm holding, stocks, funds, properties, Bitcoin or currency or whatever, I am simply looking at growth. How much can I grow my money? So for me, I don't have a preference. I'm simply looking for things that I can grow at a reasonable price. And currently, what's going on in the market, I am much more confident I can get a better return elsewhere with other options than getting an investment home. One thing you have to realize is, why does housing seem like it's so much more profitable? It's not because housing itself is growing at a very fast pace most of the time. It is the fact that you are leveraging heavily, and it's the leverage that is bringing you the large profitability. But then again, if you want to leverage, you can leverage into anything. Most people just don't feel safe about doing it because it's not hard asset. Now, this is not me telling you to borrow money to invest elsewhere. I'm just saying that we have to be clear what is actually making the money here. It's not really the choice of the asset currently, it's the leveraging that's making us the money. And also a quote I really like from Warren Buffett is saying that be fearful when others are greedy and be greedy when others are fearful. So this is why during the COVID times when nobody is doing anything, everyone's scared, my family actually went out and got some very good deal on the pre-sale because like I said, no one was buying them. And then this year, I've actually told my agent that I'll be selling my condo whenever my tenant lease is up or if he's willing to leave early because he found a better place. So if you watch my other video, I've talked about what a great cash flow generating property I have on my hand. But even still, I'm going to be selling it because when other people are jumping all in and they're overbidding left and right to get their own property, this is where I see the opportunity to sell. So I'm going to take my own advice and act accordingly. Now, this is not me telling you to follow me. I'm just saying this is what I am doing. Because the truth is, nobody is going to know what will happen to the housing market. Not me, not Mr. Rosenberg, not CMHC, apparently. Anyone telling you that they know what will happen is just simply not true. So all we can do is make our best educated guess. Don't try to time the market and just pick a view or opinion that you think align with yours. Make a plan and act accordingly. Alright, so what do you think will happen to the housing market? Let me know in the comment below. And also, if you like these kind of videos, I do upload them 8:30 EST every Tuesday. Make sure you like and subscribe to my channel. Alright, this is Jacky. I hope you found this interesting. I'll see you next week. Bye!